Welcome back and thanks for joining us. I'm Courtney,
I'm Kenneth.
and this is From Launch to Legacy, where we talk about everything it takes to start and run a small business. So the last few weeks have been a bit different. We talked about mental health.
That's a good series.
My favorite episodes so far, especially imposter syndrome and fear of failure and burnout and charts and checklists, that's my favorite.
Yep.
So today we are going to talk about the top tips in 2026. Yes.
Tongue twister.
Yes. So before we get into it, just want to remind you guys that we have checklists and guides and free resources galore on our website, www.havensconsulting.com. So make sure you get over there and download your freebies, and it will have more information on what we're talking about today. So let's just get into it, right? The world is crazy.
Yeah.
The top tips, oh man, I went forever. I could have listed 100 things. And it's so hard to know because the landscape's so different.
Yeah. The last 6 years have really changed a lot.
Yeah, it's like a whole new world, like the Industrial Revolution, it feels like to me all over again.
Right. This is really the third Industrial Revolution we've had, right? We had the Industrial Revolution, we had the Internet Revolution, which completely changed how the world worked. And then we had AI, it definitely as a driver, of course, but then kind of the remote work of COVID on top of that, which led to the economy is just rough. Inflation's out of control. Hiring reports October was the worst October since I think 2008. And so people are, they're in the gig economy. A lot of people I know are working 3 jobs, and we're kind of at a point where it's getting unsustainable. This isn't where you can go to high school, graduate, have an 8 to 5 job, and have 2 kids and a stay-at-home spouse and pay for a house and a yard.
I know grown people who families that have to have roommates.
Yeah. Yes.
And the closer to the city you live, the more expensive it is. Our pregnant, married daughter just moved 30 minutes away from us.
Yeah. If you want to see an alarming figure, go look at the average median household income. That was a lot of redundant words because that's the median household income since 1965, and then look at the average home price from 1965.
Yeah, it's completely unsustainable.
Yeah.
It's like not even
in the early 70s. It was like if you had a high school education, your house probably cost 3 years worth of salary, and now it costs way more than that. But all your other stuff's more expensive.
Yeah.
Plus, there's a lot more things you have to have. They didn't have internet. They didn't have they had television, but people didn't have cable in the 70s. It came. Once you bought your TV set, it came free over the air, like your, radio.
Yeah. All right. So really what we're talking about is what does it take to succeed? What things should I be looking at? What strategies should I be going after, And we see this stuff every day in clients' books or in their operations or just talking to them. These are real things that people are missing or not, doing as effectively as they should be.
Yeah, or they're not willing to change with the times. That's probably the worst thing being too rigid as a business owner is probably, short of setting cash on fire, probably one of the worst things you can do for your company.
Okay, so let's say that is our pre-top 10, right? That is our number half.
Yeah, that's your number half. Just be like Gumby. Stay flexible.
All right, so let's get into these tips, right? Number 1, master cash flow forecasting, not just profit tracking. So before we get into that too much, that might sound a little scary for some of you guys. The next 2 episodes are going to be all about financials.
Yep.
The next one we'll go over understanding what some of these terms mean, what the P&L is,
Mhm.
all of that, and then the one after that is, like, how to use them to help in your business.
Yeah. Think of profit as how well your business is performing, and think of your cash flow as how well you are timing that performance.
Oh, that's
So
good.
think of it like that's again, come back for the next couple of episodes.
If any of this sounds confusing, please stay tuned for the rest of the tips. This is the only one.
Yeah, and we're gonna have some more in depth uh financial episodes coming up as well. So
Yes.
just stay tuned for that. We're not gonna dive real deep into that here. These are, really 10 general tips. These are not pointed financial or accounting tips. So uh, if that's if you saw that and you're like, wait, are those not the same? My cash and profit not the same thing? Come back for the next couple episodes. We'll talk about it.
Okay, so here's a crazy fact. 82% of small business failures trace back cash flow problems, not lack of profit,
Hmm.
which is so crazy because you can be profitable on paper and you still can't make payroll.
I worked for a Fortune 500 company that was very profitable and went bankrupt
Yeah.
twice.
Yes. Which is what are you talking about in this world? Okay. So it comes down to really knowing when cash will be available, not just what your profit margins say. So, if your clients are paying late, ugh.
Yeah, because we'll have an entire probably episode about this. It's a really good metric. It's called the time value of money. It's not really an accounting or a finance principle. It's more of an economic principle. Um, and we'll talk about how to use that as a driver for decisions. But getting $10 today or getting $1 a day
Mhm.
or getting $2 a day for the next 40 days or whatever, which one's better? So
Right.
there's a formula that you can use that has, real world inputs that change and you make that evaluation, but that can help you make some better decisions. So,
Okay. So how do you implement this tip, this master your cash flow forecasting? So the way to implement it is to do a 13-week rolling cash flow. So this is not super complicated accounting, and we'll go over it more in the next few episodes, but that's a simple projection of how money coming in versus money going out week by week for the next 3 months. That will definitely help you.
yeah, you don't need any, if you can add and subtract, you can do this.
Yep.
This is not going to be complicated. Don't worry about, what about this account? Nope. Just like you would do your personal, if you're doing a personal budget and you go, all right, these are all my bills and I know I'm going to spend this on groceries and I know this is what my paycheck's going to be and when it comes in, and just go week by week. Start with what cash you got,
Mhm.
and then take out all the expenses you're going to have in week one, add all the money you're going to get in week one, and that's your week one ending cash flow. Do that for 13 weeks.
Mhm.
And then there you go. And you can see how cash, that will give you the opportunity to, maybe you've got a big payable, but I can
Mhm.
slide that 7 days. If I slide it 7 days, I'm going to get some more money in that week. You can't run a business without data. You can't sail a ship without a map. If you don't know where you're going, you'll just wind up lost.
Yep. So basically our number one tip is to know where your money is. Okay? Simplified down, there you go. The quick win for tip number 1 is to ask yourself, if your clients paid 15 days late starting today, how long before payroll is at risk? Okay. If you can't answer that question, tip number 1 is for you.
Mm-hmm.
And listen to the next 2 episodes and we'll tell you some more stuff about that. Okay. Number 2, implement AI powered automation for efficiency. So, why this matters? So, this is like the first time where AI is powerful enough
Mm-hmm.
to make a real difference and affordable enough where small business owners can use it. Because it's been around for a long time, but it was mostly science.
Well, yeah, we've got the large language models and, AGI. Now, we've had the machine learning kind of versions, and then we gave it the internet to read.
Yeah.
I mean, we're definitely in a new landscape, but with I mean, it's the it's how economics works, right? They became a whole bunch of suppliers of
Mhm.
AI services. So as supply increases, prices have to go down.
Right, which is, I use to my benefit because when I'm working on these things, I mean, I make them fight each other.
Oh yeah,
Especially this one was the easiest because I'm like, ask multiple what their top 10 is, and then
right,
I kept anything that was the same throughout,
right.
and then tweaked the rest.
And I mean, these are ones that we see with our clients. These aren't just, AI
Yeah.
came up with. We just, that was kind of
Oh,
pulled from
yeah,
the
yeah,
internet and
yeah.
verified. And so these are things we run into a lot, or that the client doesn't even think to talk about and that we
Mhm.
recommend.
Yeah, for sure, because if I probably came up with 20 when I had the 3 and moved
Hmm.
some of those out because they're really for brand new startup baby companies or they're very high technical or industry specific. So
Hmm.
I definitely did a bunch of research on these to make sure they were the best because I have to be the best.
Right. You are the
So
best.
so you can cut administrative costs by hours by 25 to 40%. That's the stat that I got. If
Hmm.
you just implement some AI automation.
Yeah. I read a Harvard Business Review article not too long ago that 95%, I think, of business or possibly Fortune 500 companies that implemented AI strategies failed.
Mm,
But what they saw was that the ones that failed almost always were front end. They were
mhm.
marketing strategies or whatever. On the back end, they were almost always successful if they were just implemented and tweaked a little bit as
Yeah.
some errors arose. So,
Yes, so that's perfect. That leads right into how to implement tip number 2, which is start small and strategic. One at a time, people,
yeah,
especially if you've never automated anything before. Definitely one at a time.
you've got your fingers in enough pies right now. You don't
Yeah.
need to be working on 10 simultaneous automation projects, because the whole point of automation is to reduce your workload and save time. If you take on 10 new tasks, you're just going to bog down the
Mhm.
stream, and now you've had the opposite effect, and you're just going to get frustrated and you're going to abandon it.
So here's tips on how to implement AI automation. So number 1, identify your pain points. This should always be your number 1 of anything, right?
Hmm.
List all of your repetitive tasks that you do day to day. So things like email responses or appointment scheduling or data entry, follow-up reminders, or
Hmm.
basic bookkeeping categories. So one of the easiest ones is we have Outlook.
Hmm.
And so when we set up our booking, you can set up a one your appointments in 24 hours or whatever.
Right.
Start there. That one has been around forever.
Yeah, and that one actually helps a lot, because we had
Yeah.
people before we put that in there, we were having people forget and not
Yeah.
show for appointments.
And now if they book an appointment, the system does it.
Right, it's all automated.
Yep.
Your first one, if you're not used to this, try something that is static. So this is something that, you're not going to have to change a name in the
Mhm.
response. It's something
Yeah.
that's going to run the exact same way every time. So you've got to pull a report every day out of,
Mhm.
and you don't have to, this doesn't have to be AI. There's definitely, rules
Yeah,
and
yeah.
automated things and a lot of your different software. And you can start there. But just start with something that works the same way every time
Mhm.
and do that one and make sure it works. And then you can start doing gradually more complex. But as each one you do, all the time you spend each day doing that is now saved. And then you can put that towards making more money or
Mhm.
automating something else. And
Yep.
this pays compounding dividends.
Yep. So, number 2 on that is to pilot one tool, one low risk process. We basically just said that, right? An automatic appointment
Right.
reminder or something, a basic customer service question, or just statement. Facebook has chatbots,
Mm-hmm.
thank you for reaching out. We'll
Oh,
get back to you.
when they direct message you, yeah.
Hmm.
Don't start with trying to have AI write your contract for you. Yeah, like,
Or, yeah, or even answer real
no.
questions. Just a response.
Right.
And then third is measure this. Don't do anything, especially this day and age, where you're not measuring that. And we will definitely talk about that in just a second. But make sure that you know how, when, why you're doing everything you're doing.
Absolutely. That should be rule 0.
Yes.
That's if you're not tracking and paying attention to what you're doing and seeing what works and seeing what doesn't, you're not running a business. Your business is running you.
Yep. And that is tip number 3. Let me give you the quick tip for 2, though. This week, you can pick one of your most dreaded tasks. Maybe that's contacting clients for
Mm-hmm.
tomorrow's appointment, or sending the follow up with a, can you
Right.
review my company if you have a product, and just try to automate that one thing.
Yep.
Okay, tip number 3, prioritize data-driven decision making.
Yep.
So, okay, here's another stat we have here. 84% of successful small business leaders cite accurate data as their top growth driver,
Yeah.
which you don't really think of. You think of data as what has happened,
Right.
but you can't grow, you can't drive your new marketing or your new sales pipeline or whatever if you don't have accurate data.
Yeah. If you may know how to drive somewhere, but if I blindfold you and drop you halfway there on a road and
Mhm.
you don't know where you've been,
Yep.
you don't know how to get where you want to go.
Yes. So you want to make sure that you are making decisions based on data. So you're knowing which marketing channels are bringing in customers, or what products have the best margins, or what clients are the most profitable, or where you're bleeding money, what department.
Yeah. Are you tracking your clients by jobs?
Mhm.
Do you have clients that are you do recurring work for, but you find out you're actually losing money every time you do a job?
Mhm.
That's a client that you can fire, and you will now have more time and more money,
Yes.
or charge them more.
So how to implement that in your business is 3 things. You need a system to collect that data. If you're brand new, just use a spreadsheet, okay? Some tracking's better than no tracking. So have a system, a way for you to visualize that, however that is, if that's numbers or what's the chart? A hill chart. And then the discipline to actually look at it. This one is the hardest one, I think, when you're first starting out.
It especially if it's not telling you happy things.
Yeah.
It's very easy to not look at the dragon in the room
Mhm.
and just bury your head in the sand. But the talked about this. I think that's all through the mental health series is, ignoring a problem doesn't make it not there. It
Mhm.
just makes it worse.
Yep.
And now you don't even know how to correctly orient to the problem.
Yep. So the steps for getting this data driven decision making is choose your tool, however you're going to do that, even if it's just a spreadsheet. Make some kind of a dashboard so that you know where the stuff is at. And then step 2 is defining those key metrics,
Yep.
right? What are you focusing on? Is it your revenue per customer? Is it your customer acquisition cost? Is it your profit margin by each product or service? Is it your customer lifetime value or conversion rates or whatever it is? You have to define these, and you
Hmm.
need to know what a good reasonable goal is.
Right. And all these are good things. And there's going to be different metrics that are more relevant for your company and
Mhm.
ones that are less relevant depending on the structure, the size, the location, the industry, all those things. So these are, if we call these KPIs a lot, key performance indicators, you're going to have to define those. One of the best ways, these are great ones that you need. I mean, I don't know any business that isn't going to need these specific ones, but look at how one changes month to month, and then look at how much of an impact did it have, because
Mhm.
now you know how much this metric's impacting. Because You may have a metric that you add in here and you realize that it doesn't matter what that number does. Like it
Yeah.
has no correlation to our
Yep.
financials. Drop that
Which
metric.
which, I've heard of a lot. This is not true for every industry, but it is for a lot of them. Your followers, your social media
Oh, mm-hmm.
followers versus how many clients you have.
Right. Those are
Now, for most of the time, those numbers do not correlate.
right.
So that's just one example or whatever. So a quick win for number 3 is, can I prove which marketing channel brought in my last 5 customers?
Yep.
Now, this is super easy. From now on, when you're talking with someone for your discovery call or your initial contact or
Or
whatever it
they
is.
walk into your cup store.
Yeah. Yes. How did you hear about us?
Yeah.
And write it down.
Write it down
That's
because
it.
write it down and then write. This seems maybe crazy, but write down, did you get the sale and how much?
Mm,
Because a pipeline might bring you in a bunch of customers. They may not be quality customers.
yes.
But then another pipeline may bring you in a few customers, but they're so high quality
Yeah.
that you've got an 80% conversion rate and they're like, 5 times your average
Yeah.
sale. Those are I've got a formula that's pretty simple that we'll talk about in one of the next few episodes, about how to evaluate if you've got multiple, especially if they cost money, multiple advertising or customer outreach streams, how to evaluate them, and then you can kind of decide if you want to drop one off or put more money into one. So it's a pretty easy metric, and we'll talk about that in the next couple episodes.
Tip number 4, leverage professional financial expertise. So, especially when you're first starting, there's going to be the temptation to DIY it, right? I can do money in, money out. That's easy.
Right.
There is definitely more to it.
Absolutely. And there's a lot more to it if you want your financials to really help you.
Yeah. So a lot of people, they think that they can handle their own books, right? And that their books are just for filing their taxes,
Right.
which could not be more wrong.
Right. A good set of financials. If I have a well prepared set of financials, I can tell you how well the company's performing. I can tell you what the management style is.
Yeah.
I mean, I can tell you so much information from it, but if you give me those financials and I glean all these insights from it, but your financials are garbage,
Yeah.
I have now taken incorrect insights and you will too.
Yeah.
This is why accurate, correct financials, and what we see a lot is this exact, I can do it.
Yeah.
And then they get in there and they, well, I don't quite understand this. And then, okay, well, I'll do that later. I'll figure that out later. And then they call us and say, we haven't filed taxes in 5 years
Yeah.
and we
Yep.
don't have books. So help.
Okay. How to implement. So outsourcing does not mean you just hand everything over, right? It means that a professional is going to get everything together, but you still have to learn how to read these things as well.
These are your financials. You're responsible for understanding them and you're responsible for their accuracy. You can hire and outsource, but I can tell you as someone that's done accounting work or, bookkeeping was a big line of business, early on in our business. We can't know what you don't tell us.
That's right.
If you don't provide us with documentation and information, we can't magically just fix the books.
Yeah. I remember this happened multiple times. Clients would have rental property and they wouldn't, it's not in their financials. They don't say anything and then they're upset because you didn't include it.
That happened this past year on a taxi train.
How can someone else know you have something you have not told them you have?
And literally the question was, and I do like this client, so if this client hears it and they're like, hey, I did that this year. I like this client, it's totally fine. But it was, hey, did we get the rental properties on there? Well, my banker who's giving me home construction loans was asking if my rental property income was on here. And I was like, how did I miss this?
Mhm.
Like, I was I'm gonna have to, eat the amendment cost and redo the financials. And so I'll look back because I was gonna get it corrected for him, and I was like, I cannot find where I was like, we had a tax questionnaire with a question about rental
Yeah.
properties, and it says nope, and there was no mention, and I was like,
Yeah.
hey, XYZ person, can you resend me where you sent them? It turns out just never got it,
Yeah.
and that wasn't included in their financial information, so they don't have good insights into
Yeah.
how their company's working.
So, the kind of things that you can outsource are monthly recons, transaction categorizing, payroll processing, anything to do with your taxes, with quarterly taxes, your annual taxes, tax planning. Everybody should be planning, okay? Especially if you got blindsided last year. Instead of getting upset again, let's make sure you're doing some planning
Yeah,
there.
because
And
oh, go ahead. No, because your tax preparer, like they can try and find you, more credits that are applicable and stuff like that. But for the most part, the year's over.
yeah,
We can't change or help anything. And, you know, the amount of people that have like hundreds of thousands of dollars worth of AGI don't pay estimated taxes. They're like, why do I have a tax bill? I got a refund last year. I'm like, well, your company made $250,000 this year, and last year was the first year it took a loss, and you
yeah,
didn't pay any taxes throughout the
yeah.
this isn't on your preparer.
Right. So if you are listening to this and you're like, "Well, I already know all that," that is so good. We are so proud of you. Take these tips, make sure you stay on it. And if you are like, this sounds so scary, listen to the next 2 episodes where we talk about what your statements are, what they tell you, and what questions to ask whoever is preparing them for you.
And here in the near future, we're hoping to have um, a webinar that's going to really go deep into how to prepare, how to maintain, and how to understand and read your financials. And so if that's something, if you get in these next couple episodes and you're
Hmm.
like, I'm in the weeds here, just there may be a resource for you that, and
Yeah,
you'll have
let
a
us
chance
know.
to ask questions and
Yep.
interact and really get a deep understanding, because these are the story of your business, and if you're getting an untrue story, you can't you
Make
can't run a
right.
business.
Yeah. Okay, tip number 5, accelerate accounts receivable collections. So why does this matter? So here's an alarming number here,
You
okay?
just drop alarming numbers on us all the time.
Yes, because research.
Research.
So the average days sales outstanding, your DSO, jumped
That's
12%
crazy.
in 1 year.
Do you know what the average was
I don't.
before?
Mm-mm.
I bet it was close to 45.
Okay, well, I'll take a look at that.
But that's a 4-day increase, and that doesn't sound like much, but I mean,
But it certainly is.
when we
If you got paid 4 days late,
on
how would
every
that feel?
invoice. Yeah.
I'm saying, like, as a paycheck person,
Oh, yeah.
if you got paid 4 days late, how would you feel?
Yeah. 12% is a big number. I mean, when it's on a scale of 1 to 100, this is a significant move.
Yeah. So if you have fast collections, that means that you can fund growth without taking on new debt. And if you have slow collections, that means basically you're providing free loans
You're a bank.
to your customers while you are scrambling to cover expenses or taking on debt you have to pay interest on.
Right. And this is why you should build in late fees, and they should outpace the time value of money. Again, we'll talk about this in a later episode, or the interest rate that you're having if you're having to borrow that money, because otherwise they're getting a loan from you at a lower interest rate and you're taking a loss. Always build late fees. And if you can get a kind of like a subscription agreement, if these
Hmm.
are monthly clients to automatically process, like Netflix doesn't call me and say, hey, you didn't run your card.
Yeah.
They just run it.
Yep. So here's how we implement that. So invoice immediately. Don't wait until the end of the week or the first day of the month or whatever, okay? Invoice the same day that you complete that project. And if you can set that up as an automatic, that would be awesome. You can do 2 of our top 5 with
Oh, yeah.
one thing.
Automate and speed up
So,
collections.
also, I mean, people are more willing to pay right after they got what they wanted.
Right. They're still,
They're still on that high of
yeah.
getting that product or receiving that service or having that thing finished.
Yeah, the appreciation and gratitude for what just happened is still very fresh in their minds.
Yep. So invoice immediately. Number 2 is make the payment process as easy as possible. So get however you are doing this product service through email, text, whatever. Enable your ACH or your credit card payments.
Mhm.
Include a pay now link. So all they have to do is click it and go from there instead of having you send that email and then they have to go find it.
Right, and then they've gotta call you and give you a credit card number, and
Yeah.
that just they will put it off because they're like, "It's gonna be a 20-minute conversation,
Yeah.
that's gonna slow you getting paid."
Yep. Offer multiple payment methods. Okay. Don't just do Zelle. Not everybody has it. Don't just do Cash App. Not everybody has it. Try to get multiple different ways to pay.
You should be accepting at least Visa and MasterCard and ACH.
Yeah.
Wire transfers are a good one if the volume makes sense. Um, and then, like, any of the, Zelle, Venmo,
Mm-hmm.
PayPal,
Yeah.
Cash App, any of those, you can definitely utilize those. And if that's depending on what market your retail probably should absolutely be using
Yeah.
all 4 of those and whichever others, and they should have QR codes that people can scan and just go right to pay. Um, but yeah, you want no barriers. You want this
Yeah.
to be such an easy process for someone to pay you.
Yeah.
We were just dealing with the IRS. We're still dealing with, they made trying to send us money that we sent them, and we're like, no, you just keep it. We owe this money. Don't send it back. And, I can't, we got the government shutdown. We can't get a
Mm.
hold of anyone, but I can get a hold of people to give money to.
Yeah.
Like, those people are still working.
Yeah.
So, even the federal government is going to make it easy to get money, not necessarily the other way around.
So, and then the second one on making payment easy. Did I say second? Last one. It's like the fifth thing we've said, but is to make your portal mobile friendly.
Mm,
This I don't think it made it to the top 10, but it was very close, is to make sure that all of your items, your website, your whatever you use are mobile friendly because most people do most things on their phone.
yeah, it should definitely have a desktop version and a mobile version, and ideally a tablet version as well. That's usually a little more robust than the
Mhm.
mobile, but not quite a desktop. But yeah, that's an excellent one because nothing will make me
Deter
pay you later.
than
Like,
not being able to do it.
yeah, that happened to me. Our window repair people just yesterday. I was on my phone. I was on my laptop too, but I was trying to pay the invoice on my phone, and it like kept not taking because it wasn't
Yeah.
mobile set up. I had to get on my computer, and I was like, I even told the guy, I was like, hey, y'all may want to fix this. It'll help pay me. I mean, I literally gave someone like some free consulting yesterday on this.
Okay. Next is you want to enforce your terms. Net 30 means 30 days, not 45, not 60, not whenever their taxes come in or whatever. Okay. Send reminders at 15, 25, and 30. If it is 30, right? If it's
Yep.
not 30. Follow up immediately on day 31. That's something that you can automate as well through most processing companies. Is something that automatically comes if the payment isn't received.
Yeah, if you use something like QuickBooks, you can set these rules up and it will automatically send these reminders for you.
Yep. And then consider early payment discounts, right? 2% off if you pay it within the first 10 days or whatever makes sense for your business.
And I used to, again, working for that large oil and gas company, we had some vendors that charged us on a 3% net 10
Mm-hmm.
or 2% net 10 or whatever, and they got paid first
Yeah.
because, I mean, again, this is a time value of money calculation if you're on the paying end here, but for usually, a 2%, if all my vendors gave me a 2% discount, I would pay everyone in 10 days. Absolutely. Because I just shaved 2% off.
Everywhere.
Right. As long as my borrowing interest rate is not higher than 2%.
And then this is the last one, but really, first thing, easiest thing, get paid up front if possible, especially for larger projects, right? If we have a huge project,
Oh, yeah.
no, you're paying at least some of this up front.
Yeah, we depending on the size of the contract, we usually require a 25% down,
Mm-hmm.
and then progress payments that can be, periodic, or it can be milestone driven.
Mm-hmm.
And you'll see large projects, construction, manufacturing. A lot of our clients, you know, they're very used to this because this is how they're
Yes.
billing too. So,
Yes.
um, don't ever start a job that you're gonna have to front load costs,
Yeah.
because they can just, oh well, we don't want to, and it's like,
Yep.
well, I've got a contract, so I'm covered. No, now you've got a court case.
Yeah.
You've got to try and recoup this, and legal fees and all that, and you're probably not going to. You're
Yeah.
just going to have a judgment as an asset that you have to write off in a few years.
Right. And like Kenneth said earlier, if you have a recurring service or a monthly subscription or whatever, then just have that auto set up.
Right. And just charge, micro SaaSes. If you don't know what a SaaS, software as a subscription, this is basically every piece of software now. You can't own anything anymore. We just
Yeah.
run it. But I mean, there's people making, they've got an idea to solve a very niche problem, and they're getting with developers, and they're launching these in like 10 days.
Mm-hmm.
And, they're everywhere, but then they're going to make sure they get paid. When you have a subscription base, your payment's automatic, and it's very reliable income.
Yep. A quick win for this tip is to calculate your DSO, your days sales outstanding. And then if it's over 45 days, you have a collections problem, right? This is a big problem.
If it's over 15 days past due. So this
Yeah,
is if your
true.
industry is a 30
Yeah.
day, this would be at 45 days. But some industries have a lot longer lead times.
And then the first thing that you want to do is start by calling your 3 largest overdue accounts. Most of the time, those 3 are going to be the same as all the rest of them. So start with those big ones first.
Yeah, and a few common things you're gonna hear. Oh, sorry, we didn't get the invoice. They probably did.
Mm-hmm.
I've worked payables. When it's time for a reporting period and we stop paying payables, these are the things they tell you. Oh, we didn't get it. Oh, well, the check's in the mail. Can you give me a check number? Oh, papers, fumble. And
Uh-huh.
so just try and get some detail, get a check date, get a check number, all that.
All right, tip number 6, create community around your brand, not just transactions. So why does this matter? Active communities see customer lifetime value grow by more than 40%.
Wow, that's an outstanding number.
Yeah, because if you feel like a community with this brand, you're going to stick around longer, buy more often, spend more per transaction.
And probably advertise it for free.
That's right. That's in here too.
All
Yes.
right,
yep. Yep, because they feel connected. So people don't just buy what you sell. They
Right.
buy the story.
Right.
They buy the values, the experience, because they're part of a community.
Yeah.
And then this last part is they advocate and refer others to you without you asking, because they are part of that community. They like it, so they want other people to join it.
Because as a community, they feel a part of it, and so they're not repping your brand for
Mhm.
you. They are repping a part of them.
Yeah.
And this is very tricky, so this is not direct advice. Please do not jump out and do this, and talk to a marketing and PR professional before you do this. But there's a tactic here where you want this community, but then you make it exclusive. You make it
Mhm.
difficult to obtain because people want things they can't have, and people want to be special.
Yeah.
People want to have things no one else can have.
Yeah.
And
In the podcasting world. Okay, so I listen to My Favorite Murder,
uh-huh,
and they say at the end, they say, "Stay sexy and don't get murdered."
uh-huh,
And I have SSDGM on the back of my car
yep,
because I love them and I'm part of that community.
right,
And then not just them, but tons of podcast communities, they have like, oh, okay, our top 10%, whatever, on Patreon.
Right.
They have all these exclusive
Yeah.
clubs or whatever, and you get a specific sticker or a t-shirt nobody else can have,
Right. I mean,
stuff like
everyone
that.
does this. The
Mhm.
casinos have tiers, and the one that I always go back to in my head, there was I think it's still around. There's in Dallas, a radio sports show called The Ticket.
Okay.
Um, but depending on how often you listened and how many of the inside jokes you were privy to, they would refer to the listeners as P1s, P2s, P3s, and P4s. And it was like people would listen more because they wanted to be a P4.
Yeah.
That's increasing listener ratings,
Mhm.
advertiser revenue, but there wasn't even like a payment. They
Yeah.
didn't,
Yeah, you didn't really get anything.
right. They didn't even define whether what level you were. You defined it, but
Mhm.
you wanted to be, and so you would do the things to make automatically.
Yeah.
So again, talk to a marketing professional before you do that.
All right. So how to implement? You don't have to have a massive budget or thousands of followers. Here's some small, simple ways that you can start building community. You can host a micro event like a customer appreciation lunch or a workshop or some kind of meetup. You can spotlight user content, so share a success story or testimonial. Invite participation by asking for reviews or creating a customer referral program. I suggest everyone have
Yep.
this. I don't think we've talked about it, but email me over. I've got some stuff on it if you want to know about a referral program and how to set that up. And then feature your customers on your content
Mm-hmm.
and show your values. So, you know, let yourself be known.
Right. Show what you have done to solve a problem or help your clients and your
Mm-hmm.
customers. Don't ever post anyone on social media that you didn't get permission from, though.
Yep. Yep. Okay, so one way to know where to start is to ask yourself, what do my clients or customers keep talking about after they leave? Is it your expertise or your service quality or how involved you are? And then double down on that, whatever that
Right.
is. So, quick win for this tip is to feature one customer or client success stories on your social media or your website. Share the problem that they had, how you helped, what they achieved, and then tag them and thank them.
Absolutely. That's a
So,
great idea. I love
super
that.
easy. Tip number 7, invest strategically in video and social media advertising. So, this is super important. We've started with, our podcast here. We definitely need to do more. We do not have video on our social media. So, that is something that we are talking about doing.
Yep. We got some plans in the work there.
Yes. So, video is the dominant form of content consumption right now and projected to be in 2026. 53% of small businesses are increasing their video marketing budget for the upcoming year.
That's great. I read the 2026 as part of this, and
Mhm.
with the period, there's a decimal, and I was like, I'm sorry, does it say 2026.53% increase? I was like, that's over 20 times. I was like, but I see. That's
Yes.
2026, a year period, 53%.
So, as of right now, this is your highest return on investment is video marketing. And I just started reading about this. This is a new thing to me. Don't know if it's new in general, but I am in this stuff a lot and I just started hearing about this. Google's new algorithm goes based on the EEAT reward system.
Mm-hmm.
So that's experience, expertise, authority, and trustworthiness. That is their new, when they did their updates, that's the new algorithm for who they promote.
Okay.
They have to have experience, expertise, authority, and trustworthiness. How do you get that? Social proof. So I think we've talked about that before. That's testimonials,
Mhm.
reviews, stuff like that. All right. How to implement. You don't have to do a podcast like us. You don't have to have a production studio or fancy equipment or anything like that.
Now you've got a smartphone.
Yeah, which is absolutely what we used in our first videos, and I like the quality and the color better on the smartphone than I do on our new camera, but the new camera works better
Yeah, it's a lot
for
less problematic in the
yeah,
studio.
for connectivity. So, you can batch your content. So, just one morning or one day a month and create 3 videos that pertain to your business. Pick, topics that are always relevant, not like, "Hey, this is what I'm doing for Christmas," because it
Right.
may take a while for this to reach an audience. So, your answer your top 3 most asked questions, keep it simple, just use your phone with the lights on and it being quiet. I mean, basically, that's how we did our first few episodes.
Yeah. I mean, I've seen a lot of people that are walking down the street in
Yes.
selfie mode, and that's what
Yep.
their reels or YouTube shorts are.
Yep. And if it's quiet and it's not moving too much, you will get people
Absolutely.
to watch that. Um, this is one I wish more people did, but especially on the short videos, is to add captions because I don't listen to sound.
Right.
At night, I will scroll through Pinterest, right? Looking up baby stuff or crocheting stuff because I am super honey now.
Yes.
But I like when I can just read what they're saying because I don't have the sound on.
Right. Yeah.
So
Yes.
and then optimize your distribution by using hashtags, local hashtags, relevant keywords to make sure that it's getting to the right people. So, a couple of content ideas would be like the top 3 mistakes
Mhm.
that your ideal customer makes with whatever your service is.
Right.
Top 3 mistakes business owners use when doing their own bookkeeping
Yep.
would be something like for us.
Undeposited funds, interest and loans, and depreciation.
Okay, there you go. Maybe there will be a video coming up on that. Behind the scenes is good for if you have a product, how we make this cup.
Yeah. It's a little boring when you're a consultant and you're like, this is how I type a spreadsheet.
Yeah. And a quick tip, one piece of advice. So that's another one. And
Hire a
then,
professional.
yeah, where to post. We have an episode where we talk about social media a little bit, but if you are not sure where, it's not an episode number, but it is on our resources, and the name of it is Choosing Your Social Media Platform, a Strategic Guide.
Oh,
So
yeah.
you just go download that. There's not a whole episode on that, but there's a guide for how to pick that, and that will help you figure out where to post for your industry.
Absolutely.
All right, a quick win for this tip, a 2-minute video on the most common customer question that you have and just post it everywhere and see what happens.
Yes. Yes. And if you're nervous, if you're camera shy, do what Courtney did and make a couple of videos that no one ever sees first and get used to your problem is you're not used to hearing your voice like that and you look weird
Yeah,
because you're used to seeing yourself in a mirror and your face isn't symmetrical. So when you see yourself on camera, it's flipped. And so now you look,
everything is
yeah,
skewed.
you look not, it's you. And you're like, that's me, but I don't look quite right. And I don't sound quite right because we have 2 to 3 voices, depending on if you have an inner monologue. And it's the voice that everyone else hears, the voice we hear when we speak out loud, and then the voice in our head.
Hmm. Yeah, that's what I mean, the first video I made was just me taking all of our office stuff out of
Like an
this.
unboxing video.
No, my first one was just me taking all the furniture out
Oh.
and then moving in our new studio furniture.
Mm-hmm.
The second video was unboxing all of our stuff here. And then the third video, I don't remember what I was doing, probably setting this stuff up and listening or whatever.
Probably.
But it definitely helped because when we went to shoot our first video, I mean, it's it's just what came out for the first time ever, like it's not there wasn't multiple takes. It was it.
Right. And there's everything has a learning curve and a
Mhm.
comfortability curve. So just know that it will just, the more you do it, the better it will be.
Yep. All right, tip number 8, diversify your supplier and vendor relationships.
This is super important.
So, like I said about the first 4 being for everybody and then the rest would depend on industry. So, this definitely is industry specific, but if you have suppliers, this you need to do this. Move this farther up your list.
Yeah, anyone that and required physical suppliers and was doing that in COVID now knows the importance of having redundancies in your suppliers.
Yep. Just in 2025, so far this year, if you're listening to this when it came out in December, tariff swings and supply chain distributions increased cost by 11% if you only had one source.
Yep.
So that's a lot in one year.
That's a crazy increase in a single year on your cost of goods sold, basically.
Yes, because that is not 2020.
No.
That is just one year in the world we live in right now.
Yep. And we'll see the pop back off these tariffs. What you'll see is people just will find the way to circumvent it. I remember when we had I think it was lime. You couldn't get There's a huge tariff on China. And when I worked at the bank, we had a client, so they just built a factory in Mexico and they imported
Mm,
because Mexico didn't have a tariff.
yeah.
And once they combined it in their product, it wasn't a taxable item. And so they put it's a very common dishwashing solution that I'm not going to say out loud.
All right. If you are dependent on one supplier and they have delays or price increases or quality issues, your whole operation could stop in one moment.
Yeah.
So you need to diversify your distribution, your where you're getting everything.
Yes. All your suppliers, I mean, it's called a supply chain,
Yeah,
and a chain's only as strong as its weakest link.
correct.
And so if you can have 5 links coming off one, and so if one of those breaks, you still got 4 more to hold everything up. But if it's all just single dependencies in systems building
Mhm.
and everything, it's called a single point of failure, and it's a huge risk. If you're asking for a prop, you're guaranteeing and creating a new problem if you do that.
So, step 1 on how to implement is identify critical dependencies. So, get out your spreadsheet or whatever, list every supplier, vendor, or partner that could impact your ability to serve your customer, every single one of them. And then, like Kenneth just said, those are your single point of failure.
Yeah.
Step 2, establish backup relationships for each critical supplier and identify at least one alternative. So, research some similar vendors, request samples and pricing, test the quality
Yeah.
before an emergency happens, and then maintain that relationship even if you don't use them so that you have a backup.
Yeah, if you let that go stale, you're going to be basically starting from zero when you need them.
Yep. Step 3, document and monitor. Track your lead times. Okay. That's something that people forget when they're doing these things. How long did it take? Because you're used to getting it from your supplier on a regular basis. So you need to know what that will look like when you transfer over,
Yeah,
if that happens.
and we'll have a fun inventory episode. We'll talk about just in time, replenishment and
Mm-hmm.
thresholds and all that. But yeah, you need to test those and to maintain a relationship. There's probably items that you're getting from someone else, and that they're going to provide that you're going to get a better deal on those items. Just order those.
Yeah.
So now you're saving money and you're maintaining an ongoing relationship
Yeah.
with this vendor.
Yeah. Even if it's just something small and simple.
Zip ties. I mean,
Yes.
whatever. It
Yeah.
doesn't have to be anything.
Yeah. But
But
then you already have. So you're going to get preferential treatment.
yeah, and you already know how their lead times work. You know
Yeah.
how their billing works. They know they have your information. You've worked out the kinks ordering screws or widgets or zip ties or whatever it is. Not when you need the main thing, cups for
Yes.
your cup business. Oh, well, that's a 6-week lead time.
All right. Along with tracking those lead times, you want to track their delivery reliability. Like maybe they have a short lead time, but they don't have it all the
Ooh,
time. Document their contact information, their pricing, and their minimum orders because that one can also be a problem,
yeah,
you know.
you need to understand the terms. Ideally, you would get a price book.
Yeah.
Uh,
Not
that's
everybody has those
not
though.
everybody has that. And that's fine. Depending on your size, the bigger you get, the more you can kind of force people to create those.
Mhm.
But you just get agreed upon pricing, and depending on the industry, that could be a 1 month agreement or a year agreement, anywhere in between, depending on how often prices change on their end.
And then you want to make sure you're monitoring, okay? Review this quarterly. They change. There's new options. Prices change. Owners change. They may shut down, but you haven't maintained that relationship and you don't even know. And now they're your emergency backup and they're gone.
Yep. Or your suppliers change, and now
Yep.
the quality of your product is not the
Yeah.
same.
So you want to test your backup suppliers at least once a year. But if you're ordering a lot and you're heavily dependent, every quarter, every month, every week, whatever your specific situation calls for. And the last part is to build strategic relationships. So treat that supplier as a partner,
Mhm.
okay? Treat them well. Have a good relationship because that can mean you get preferential treatment. People want to work with who they like.
Yeah, absolutely. And you know, we obviously you treat your clients, very well. But this one, I think, I'm paying, and
Yeah.
some people can. If you've been on the receiving end of that, you know that there's a lot of people out there that can, really be jerks about it. So, but I love that. Treat your suppliers as partners,
Yeah,
and
because they are.
they are your partner. They are,
If they don't have what you need and you can't get it somewhere else and your business goes under, you're gonna wish you treated them better.
yeah. If you rely on someone to do your job, that's a partner.
Yeah. All right, quick win for number 8 is identify your biggest operational dependency and then find an alternative supplier
Absolutely.
and request a quote from them. You don't have to switch.
Mm-mm.
You just know if you like them or not.
Yeah. Again, ask for a sample so you can test quality. Run a few test runs through it. Just rule in programming, and it should be a rule everywhere. Don't test in production.
Yeah.
Don't wait to test the quality of these products when your main supplier can't deliver, and now you're doing this way, and you find out they have an inferior quality product, and now the reputation of your business is hurt. Don't ask questions you don't already know the answer to. Don't put products out there that you don't know what's in
Mhm.
them.
All right. Tip number 9, maintain lean operations with controlled growth. So, why does this matter? So, scaling your business without expense control is the number one cause that cash positive bankruptcies happen. So, this is pretty crazy because I don't deal in the financial side. So, a lot of this stuff's new for me, especially the next 2 episodes where we're talking about financials
I'm
and
super excited.
all of that. Even profitable businesses go bankrupt.
Hmm.
And most of the time, because they grew so fast and they didn't manage the cost. We talked about this in the mental health episodes as well, but like your business is growing and you get offices, hire employees, get new equipment, you do all this stuff, and yeah, it can get out of control fast.
It sure can.
So,
And oh, go ahead. Yeah, you need to make sure it's whatever you're growing to match or keep up with. If it's not sustainable, if it's a trend, if it's a fad, if it's seasonal, whatever, it's not a bad thing to grow to match that, but you need to grow in the same fashion. So if it's seasonal, you hire seasonal employees that know they're seasonal employees. They don't think they just got
mhm,
a full time job and then you're going to let them go in 3 months. They know
yep.
it's seasonal or whatever the situation is. You need to understand what it is.
So episode 14 through 16 is our scaling episodes. So
Hmm.
if this one, if you are about to scale or you see growth happening, just go listen to them right now. And there's things you can checklists and stuff that you can print off and who to hire, outsource, employee, whatever on the website. So go get that and you'll be ahead of the game.
And if you want to know what uncontrolled growth looks like, you can go look at the graveyard of oil and gas companies that have come and gone in the last 50 years that grew to from nothing to $10 million a
Mhm.
year in a month. And then 2 months later, they didn't exist because it was too highly leveraged
Yeah.
and the bottom fell out.
Yeah.
So it, if, if the growth that you're matching isn't sustainable, your growth is not either.
Yeah. Absolutely. Okay, here's a real world example. So there's a tech service firm and their revenue's growing by 30%. That's great.
Year over year, yeah,
Yeah. That's great.
that's
Okay. But they subscribed to every software tool. They subscribe to everything. If someone said you need this, they said let's do it.
mm-hmm.
So at a quarterly audit, they found that they were paying $2,000 a month in unused or redundant SaaS.
SaaS.
That's not what they needed.
No.
That is trash
Yeah.
SaaS. Trash SaaS.
Trash ass.
So they were wasting $24,000 a year when they could have been funding training or hiring help or, building up a cash reserve or whatever. So just make sure that you're watching where your money's going and that you're not growing too fast and you're not taking on all these subscriptions or tools to help with growth that you don't need.
Yeah. And, like we talked about earlier, and we'll talk about the next couple episodes, that your financial statements can, give me insight into how that company's ran. If I see this number here like this, I'm gonna guess someone's asleep at the wheel.
Mhm.
This is not being paid attention to, this is not being tracked properly. You know, all the costs aren't being, do we need this?
Yeah.
And it's
And
just waste.
if you're new, start it now. It's so easy to start it now.
Yes.
Is to just get a spreadsheet and just every time you sign up for something for work, you you put it in your spreadsheet. When did you start it? When did you cancel? How much it is?
Yep.
There's more that you can go into, but at least those things. Because then if you're like, okay, we're in a rough spot, we need to cut some costs, you have
Mhm.
all of the information right at your fingertips.
Another big problem here was that they didn't even know
Yeah.
that they had these. So that's what happens when you let your financials and your operations kind of, we say be an active participant. They
Yeah.
weren't being an active participant. And we talked about, your money and your company being like a toddler. Well, it got into $24,000 worth of trouble,
Yeah.
on its own because
Yes.
you weren't
Paying
directing
attention.
it. Yeah.
Mhm. Some of those they meant to cancel, didn't. So it's just a waste. All right. So how do you implement this tip? Do a quarterly expense audit. Break your expenses into your general and administrative, your research and development, your sales and marketing, and your operations. For each of those, ask what would happen if we cut this
Mm-hmm.
and what return does it generate? And then cut or repurpose 10%, not randomly,
Not randomly.
whatever's redundant, subscriptions, has a low return on investment, and then reinvest strategically in a high impact area.
Yeah. And also look at areas where you may not be able to eliminate, but you can offset a lot. I'd say nowadays 90% or more of the payments you're going to receive are credit cards, and so you're
Mhm.
going to be paying anywhere between 2 and 5% as the merchant. You're going to have to pay for that processing. If that's not built in to
Yeah.
our pricing builds that in, and so won't get complicated. We do 4%. It's more than it is, so we have a negative credit card fee because we on paper recoup more than we get
Right.
charged, but that we've offset that cost. And
And you have to do that for everything.
yeah, if you're not being deliberate about your pricing, and we'll talk about again break even analysis and some stuff coming up. in the next couple of episodes, but you have to be deliberate about this stuff, and you can't not know what's going on.
Yeah.
This is you just can't.
Yeah.
You just can't.
Okay. So here's a question, a stress test question to ask yourself. If your sales doubled tomorrow, what would break?
If it's you, that's not good.
Yeah. So if the answer is everything or most things or you're not ready to scale. Go listen to, we have 3 episodes on scaling and then episode 13 on pricing. So look at those things, see if you can get some stuff in place before this happens. True growth readiness means that you have systems that can handle increased volume,
Hmm.
your SOPs, team capacity or a hiring plan, supplier relationships that can scale. Like we talked about with the suppliers, that you may be getting a great deal at what you're doing, but if you go from 10 to 100, can they accommodate?
Yeah.
And then you have a financial runway to fund. There's going to be a lag. We talk about that in the scaling
Oh,
episodes. Make
absolutely.
sure that you have some money set aside for that time period.
And another thing to think about that most companies don't when they're talking about scaling. Everyone's looking up the mountain when they're talking about scaling, but there's definitely times where you need to scale down. It's the right decision, and you can put yourself in a position where you're not agile enough to downside. You can
Mm-hmm.
scale up
Yeah.
because people sell you more stuff, but you're locked into subscriptions and contracts,
Yeah.
and now you have these costs that you can't get rid of, and the market's downscaled, and now you're bleeding cash.
Yeah.
So your ability to scale should be,
Both ways.
yeah, it's not unilateral. That should be definitely bi-directional.
Yeah. Ah, that's great. We should have talked about that in the scaling episode.
Well, we'll have a follow-up or an update.
Yeah. All right. Quick win for tip number 9 is to pull your last 3 months of expenses, highlight all your subscriptions and recurring charges, and call or cancel anything you haven't used in the last 60 days.
If you haven't used it in 60 days,
You're making it without it.
right, or if you need it again, sign up for a month and immediately cancel,
Yeah.
but that's cheaper than keeping it on for a year to have it for that month.
Yep. Tip number 10. Woo! Build a 3 to 6 month cash reserve before you scale.
Because like you said, there's a lag there. You don't scale and immediately make that money. You had to borrow
Yep.
from internally, externally, however, whether that's pushing your payables back to hold more cash or however you finance this growth. And that has to be recovered before you reap any of the benefits. So
Mm-hmm.
yeah, if you are going paycheck to paycheck, or you're running very lean in your company and you're about to triple, quadruple scale, you're just go ahead and call a bankruptcy attorney. I mean, honestly, because you have signed yourself up for an unsustainable, devastating disaster.
Yep. Another point to that is when unexpected expenses hit, because they absolutely will, or maybe a major client delays payment. Okay, maybe your biggest client and they're always great and you don't have to worry about them, and then someone in their family dies.
Yep. Yeah, you wanna hound them when their dad died
Yeah.
about payment.
Yeah. Or or you have to hire, or there's a great investment possibility. You just have to have this cash reserve.
Because if not, you're gonna have to make a hard decision where I'm going to have to give up this growth because it's healthier for my company than trying to do this without the ability to meet the
Yeah.
challenge, without the ability to meet the obligation. Uh, and that's going to destroy my reputation.
Hmm.
It's going to destroy my morale. Um, there's if you're not prepared for it, it's better to just not.
Yep. Okay. So, how to implement. Step 1, calculate your monthly operating expenses. So, that's everything, your payroll, your rent, utilities, insurance, whatever. That's your burn rate. And then step 2 is to set your reserve target. So, you want to get your burn rate and you want to have 3 months at the very minimum, or 6 months is your ideal. That's your reserve goal.
Yep.
And then step 3 is to build it systematically. So you can automate some transfers, like 5% of each payment goes into this separate bank account. If you have a large deposit, tax refund, or a large bonus or whatever, half of it goes in
And the
to.
other half should go into investments or debt reduction.
Mhm. Don't just hold cash.
Don't hold cash and don't buy stuff you don't need.
Yeah. And then you wanna treat your cash reserve as a bill, right?
Absolutely.
I owe this money to the cash reserve, not it's extra money.
Right. Yeah, you need to think about this one mental trick will change the way you interact with money completely. Money is not a media in which you exchange for things. It is its own product. If you
Mhm.
get a loan, you're not borrowing money, you are buying it. The interest
Yeah.
rate is the cost of that money.
Yeah.
So if you think of it like a product and it's like, if I run out of that, if I run out of, stainless steel or whatever we've got, I can't run this business.
Yeah.
Same with cash. It's your most versatile asset. It's also your deadliest one. You can have too much of it and
Mhm.
you can bankrupt yourself by holding cash, which is a insane scenario, but it happens.
So, quick win for tip number 10 is to answer this question. How many months of payroll can I cover if sales freeze today? If it's less than 2, you need to start your automatic transfers this week.
Yep. And if you are saying, I don't have 5%, then go back up and you need to reevaluate your expenses and you need to cut costs and you need to find this 5% wherever that is and start with your owner draws and then see if you can find another
Mhm.
place because that will give you the motivation.
Yep.
Don't take it from a necessary place or something that's going to make someone else's life harder just so you can keep your paycheck. Don't do that. That is a short-term solution creating a very long-term problem.
Okay, guys, that's our top 10. It's me, so I over researched. So I do have some alternatives. I've got 5 alternatives that I'll run through pretty quickly.
Honorable mentions.
Yes. And if you have questions about these ones, you can email me and I'll give you some more information. Okay. Alternate number 1, develop multiple funding sources.
Like revenue streams.
This is like with lenders and lines of credit.
Oh, okay.
So,
Funding. Excellent. Okay. Yeah.
yes, yes. So don't wait until you need some financing before you.
You can't get a loan when you need it.
That's right. You can't.
You need to be approved for it when you don't need it so that way you can get it when you need it.
That's right. So build these relationships out. Alternate number 2, strengthen your compliance governance. So this is any of the state privacy regulations or cybersecurity or the website
Sure.
Disabilities Act, whatever
Yeah.
that one is.
Or industry specific regulations
Yeah,
or
yeah,
which
yeah.
if you don't know and your industry is probably regulated, get that fixed right now. You need
Yes.
to understand what those compliance things are and get compliant.
Yep. And get a binder and put the papers in there or have a file that your whole team is accessible, and anytime new stuff come, put it in there. Make sure that you're staying compliant.
And have periodic compliance
Mhm.
training. It's boring. It sucks. We all hate training. Um, but
Do it anyway.
you have to because if your people don't know how to keep compliant, you could have all the processes, all the tools, all the resources, everything, but if no one's using them because they don't know to or they don't know they have to, you just have garbage sitting around and not com- you're non-compliant. Yeah, non-compliant
Non-compliant.
because you know having a problem with a vendor, having a problem with a client, those are problems. Having a problem with a regulatory agency, they can just go, "Hey, your doors are closed until you're compliant."
Alternate number 3, this one depends on your industry for sure, but it's adopt sustainable and transparent business practices. This this is something that a lot of people are looking for. Is it eco-friendly? Is it sourced local? Whatever. So if if you're in an industry where this is applicable,
Mhm.
then this is something that consumers are really looking at right now.
Yeah. Keep an eye out for this though, because we'll call these the moral shopping.
Mhm.
Uh, I mean, it's very good, and you don't pollute the earth, don't pour poison into the lakes and all that. I mean, obviously, but what you will see as times get tighter, people care a little less about the environment.
Mhm.
The green that they're really caring about is the one in their wallet. So
Yep.
you'll see companies really pull back on this during, economic downturns. So pay attention. It could be a huge asset at the times right, and it could be a huge liability if it's wrong.
Alternate number 4, cultivate strategic partnerships. So this is like forming alliances with some non-competing businesses or semi-competing as well. So the non-competing is like if an IT firm and an accounting firm bundle up some services, or a photographer works with an event planner and they refer each other, or a coffee shop and a co-working space come
Ooh,
together. Yeah,
these
neat,
these are
huh?
great ideas.
Yes. So, and then some semi-competing would be like, okay, this accounting firm does specializes in restaurants, this one
Oh,
doesn't.
right, yeah,
So you refer each other out.
kind of the same industry, but we don't actually have overlapping clientele.
Right. So you want to cultivate these strategic partnerships right now before you need someone, right? Make some friends, go to coffee.
Yep, yep. We've
It's
got
easy and fun.
a very she's one of the nation's top, nonprofit,
Mhm.
accountants, and, she, of course, gets for-profit work, and I'm sure there's some other, companies that she does this for, but she kicks a lot of that our way, and, so, I mean, we do the same thing because
Yeah.
we used to handle a lot of nonprofits, and we kinda moved away from that, so we get nonprofit approaches, we send them her way, and then
Yeah.
she did vice versa. So
Yep.
but we're technically competitors.
Yes. And, when times are hard, she's a good person to talk to when you're like, did you hear this new regulation that came in? And you can you need a friend that's in your same industry.
This person I'm talking about, I emailed her just the other day. I was like, "Hey, person, I may just be fatigued from tax here." I was like, "But this seems wrong. But
Yep.
tell me if I'm just being." And she was like, "No, you're not. You're not being. It's what you think."
Yeah.
And I was like, "Okay, I just wanted to make sure that this thing was the because you can look at the same thing over and over and over again, and you start questioning. You're like, is that right?"
Yeah. Yep. So, one thing that you can do on that alternate number 4, cultivate strategic partnerships, is to list 3
Do 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 do.
adjacent businesses and then explore some referral swaps or, joint offerings that you can have out there.
Think outside the box. Just have bad ideas and then see if you can
Tweak them to good.
just make them a good idea. And you can really come up with some creative stuff there. And making a strategic partnership,
Mhm.
if you don't have one with someone and you try and build one, you will either now have a strategic partnership or you'll be right where you are right now.
Yes.
Those are your options.
Yep.
There's no harm in trying.
Mhm. Alternate number 5, optimize local SEO and Google Business Profile.
Mm,
So, this one, I also have a list of 10 for brand new startup businesses, and this one is on that one as well. We have a whole thing on this. Episode 10, we talk about it, and there is a side resource on how to optimize your Google Business Profile on our website already. It is so important that you have this. That is how people find things. Either they go to Facebook or they go to Google and they look up your Google business profile. The thing that pops up on the side lets them know that you're a legit business. Even if like I'm not going to click on that at all, if I'm like, I don't really know about that, like I see an ad for something and I want to, if it doesn't pop up with a profile, I think it's a scam.
absolutely. If I Google a place and it's like, you get those Google icons and it's like, call and if there's not a
Yeah.
website button,
Yep.
I'm like, or it goes to their Yelp
Yeah.
page, or I'm like,
Yep.
they may be a great business,
Yes.
but it doesn't, It doesn't matter how your business is
I
or what it's
want
doing.
you Google verified because it was horrible trying to get
Yes, it
Google
was.
verified.
Yes, it was.
So I know that you are a person who's willing to stick it out.
Yes. What is it that the average time someone spends on a page if they don't find what they're looking for is 8
It's
seconds.
less than that.
It's less than that.
It's like, yeah, it's less than that now.
Because when you go on a website and you click those little 3 lines for the menu on your phone and you know what pages you're expecting. I'm expecting a contact and about us. I'm expecting pricing. That's another thing. If it's something that should have pricing, if it's
Yes.
pretty typical and you don't have your pricing on there, if I have to guess, I'm going somewhere else
Yeah.
that may
Because
pay
there's a
more.
million others
Right.
that have exactly what I need in 5 seconds or less.
Right.
That's it. That's all our stuff on our top 10 tips for 2026.
That was an excellent list.
Thank you. Thank you. So, if you're ready to take action, then you can visit www.havensconsulting.com/resources to download the episode guide or worksheet or checklist or tool or whatever for whatever corresponds with what is pulling at your heartstrings
Yeah.
right now, whichever topic or episode or whatever you are like, that's the one. That's
Yeah.
the thing I
Wherever
have
your
to.
pain point is, we hope
Yes.
we helped out with that.
Yep. And just for the upcoming year, success in 26 is not about chasing every trend or implementing every piece of technology. You really have to master the fundamentals.
Yeah.
You have to know your numbers. You have to manage your cash. You have to build out your systems, and you need to stay close to your customers
Yep.
because they're it.
They're it.
At Havens Business Services, we don't just offer advice, we roll up our sleeves and help implement these strategies, from bookkeeping cleanup to managing
Yeah.
management consulting to.
Process consulting, all that.
We want to save you time and provide you reliable solutions so that you can achieve sustainable growth.
Yes.
Sustainable growth. One growth spurt. Oh, it can make or break you. So, we want you guys to remember that you do not have to do this alone. We are right here. Whatever you need help with, you can book a consultation right on our website at havensconsulting.com.
Those initial consultations are free.
Yes. And if you got value today, you can help us by subscribing so you never miss an episode, or sharing this with another business owner or anyone that you think
It
would benefit.
it out. Yeah.
Leave us a quick review, but only if you liked it. It helps us to reach more small business owners just like you. We'd also love to connect with you guys. Find us on social media at From Launch to Legacy or at Havens Business Services. Drop us a question. Tell us what you're working on. Send us a win. Just say hi, whatever. We love hearing from you guys. If you have a question on anything we went over today, let us know. We'll answer it.
Yeah.
The next episode, we're going to be talking about understanding your financial statements. Kenneth is going to go off.
Yeah, I'm excited about the next couple episodes.
And then the one after that, we're going to go over how to interpret these things. Until then, keep leaning in, keep learning, and keep building the business and life that you've always dreamed of. We're honored to be part of your story from launch to legacy. Bye.
Bye.